exploring the investment landscape with a guru's wisdom and a strategist's insight. Good Life Companies presents The Market Enthusiast with Noah Brooks and Chris Needs.
Welcome back to another episode of The Market Enthusiast. I'm Chief Market Strategist here at Good Life, Noah Brooks, and with me today,
Senior research analyst.
Chris Needs. Yeah, thank you so much for joining us today. We have, we're packed full of information today, right?
A little pre-Christmas podcast for you.
Okay, I'm good with that.
Mm-hmm.
We are mid-December, and it has been a joyous year. Has it been a joyous year? It's been a profitable year.
It has been.
Market's up. Stock market's up. Bond market, not so much.
Mm-hmm.
But overall, stocks are up. Tech's up. NASDAQ's up. S&P's up. Dow's up.
NASDAQ 20,000. We got Dow 45,000. And then it's been a slip slide down for the Dow since.
Yeah, the last month or the last 2 weeks or so have not been so great in the overall markets. You just said the Dow hit 45,000. I think it was November 28th, maybe, or the 4th, one of those days. And we've had 9 down days in a row since then. That, from what the headline on CNBC is, that has not happened. 9 down days in a row, and it looks like it's going to end today with a down again. So it'll be 9. That hasn't happened since 1978. So,
where were you in 1978?
I was like 3 years old. Where were you in 1978?
Lord knows.
I think Grease came out in 1978.
Oh, yeah?
You remember the movie Grease?
Yeah.
Yeah. Oh, you're a big fan?
I had a roommate who used to do the one sing and dance, so we actually just set up his bachelor party. So
there was a John Travolta ad this week while I was watching some well, it wasn't football. I don't know where I was watching it, but there was a John Travolta ad where he was dressing up as a different character, but doing his wasn't Grease. What was the other movie? Saturday Night Fever. He was doing his Saturday Night Fever bit in character or something else. Bringing back all those things. Do you remember Saturday Night Fever?
I never saw it.
Yeah.
Nope.
All right. Well, you have something to look forward to over the holidays to watch that. Yeah. So listen, 9 down days. It feels a little bit off. Your NASDAQ's been up, hitting new highs, while the Dow Jones is actually not.
Consumer discretionary last week was the only positive S&P 500 sector. So definitely just a little bit of air coming out since the November rally a little bit.
So consumer discretionary, top 2 holdings, Tesla and Netflix.
And Netflix is the second.
Yeah. And speaking of Tesla, when you look at the returns since the election, we talked about this 2 weeks ago, but I updated my data. Since the election, Tesla is almost a double. I think it's about 94% since the election, nearing 440 today, something like that.
A lot of shorts got burnt there for sure.
Oh yeah. Now that was not all short covering.
Oh no, definitely not.
Right. I mean, that is people actively buying Tesla.
Yeah.
But it seems like it's gotten a little ahead of itself.
A little squeezy.
A little squeezy.
A little squeezy.
I like that. A little squeezy. Yeah, so the real question is what is 2025 going to look like? And I don't know how much in detail we're going to go over that today. We have a year in review and then a 25 outlook coming up on January 6th, I think it is. But I mean, do you think we can get 3 years?
3 years of 25+% return?
Well, how about 3 years of
positive?
10+? Yeah.
Oh, 10+? I think we could get 3 years of 10+.
Yeah, that seems likely.
Yeah.
But
I'm sure there's going to be a little bit more volatility next year than we had this year. I mean, the worst drawdown we had on the S&P 500 was, 8.7%, I think. I think we'll get a little bit more volatility next year. We have someone who makes, I guess, a few more headlines head to the presidency. So we'll be watching our Twitter or our X accounts.
You're not allowed to say
Twitter
anymore.
Yeah.
You're not allowed
It's been too long. I shouldn't be making that mistake anymore.
I can't help myself, though.
Yeah.
It'll always be Twitter in my heart.
Still call them tweets. So what would they be called?
X's.
Yeah, it sounds ridiculous.
It does sound silly.
But
It does sound silly. Um, yeah, so we've had a little bit of a pullback over the last 2 weeks, not necessarily in tech stocks or the Nasdaq, but certainly in everything else. Small caps have pulled back, even though they're still, double digits for the year. Mid caps have pulled back. The equal weight S&P 500 has pulled back. I don't think it's 9 consecutive days in a row, but it was definitely 7 at one point. So I think there's just a little bit of wind coming out of the sails and realization. I mean, we talked about this earlier today. We have in the news, we have the Canadian Prime Minister Trudeau, who may or may not get booted one way or the other. People are talking about resignation. People are talking about a snap election. And
there's been a lot of that going on, hasn't there?
There has been, yeah.
France, Germany, South Korea just impeached their president after he did the martial law a few weeks ago.
Yeah.
And then, there was a scathing finance minister resignation letter, I guess, and Trudeau is on the hot seat, we'll say.
But so when you think about it, though, like under normal circumstances, I don't know that it would make too much of a difference. But in the context of how it's playing out, the opposition leader in Canada is coming out and saying that Trudeau essentially cannot handle Donald Trump and that he's very weak. And so I don't know if that's right or wrong, but if the opposition wins a snap election and he's preparing to do battle with the United States over tariffs, that to me doesn't seem great. And that might embolden Mexico to do the same thing, or it might embolden China or anybody else. If our largest single trading partner, which is shares a border with us, is basically like, nah, that's not going to work. That's not going to float. I'm not going to be taken advantage of. Whether they are or not, I don't know the detail of it. But it seems like there might be a change coming there.
Yeah.
What's the statistic about Canada we were talking about a few weeks? Is it 50% of the population of Canada lives within 100 miles of the United States?
Yeah. Yeah, I think it was 100 miles.
And I just have to say, the bluster from the soon-to-be president about making Canada the 51st state, I don't think that.
You don't think they like that?
I don't think they like that very much.
Checks out.
Do you think they like that?
I wouldn't like it if someone was saying that about our country.
Yeah, no. Mexico will be the 52nd state.
A lot of them may not like Trudeau, but they don't like that either.
Yeah.
So.
No, I got you on that one. I did mention Elon Musk, or at least Tesla is up, almost 100% since the election. The way that pans out is that makes him worth close to $500 billion, right? Certainly the number one richest person in the world. And if I'm not mistaken, our total gross domestic product here in the United States is roughly $40 trillion, depending on the time of day. So if he's worth $500 billion, that makes him worth 1/80th of the entire gross domestic product of the United States.
I mean, we briefly mentioned it earlier, but that's he leveraged himself. He just kept betting on himself. If you look at the different business he's owned over the years, every time he would either get bought out or do an IPO, he just took that money and threw it into another venture. So he's just been betting on himself and levering himself time after time after time. And I guess it's an ultra risky proposition, but that's how you become the first person to eclipse 400 billion and I guess soon 500 billion.
Yeah, it's very close. It was last week. It was like 480 or something.
But I wonder how much of that's liquid. We also toss that around, because we talked about you can get loans off of your stock,
Sure.
ownership, which
Sure.
is a vast majority of his wealth. But I wonder what percent he has liquid. I'm sure it's a very small percentage compared to that 500 number.
And therein lies the rub where people are talking about taxes on unrealized capital gains. And I think it's worth mentioning that. I don't think you and I are ever going to get taxed on unrealized capital gains. And it's probably now, with the administration change coming up, it's probably not something that we're going to see here in the short term. But the concept is, if you have somebody like Elon Musk who has this wild, crazy net worth, and he's utilizing it through loans against that stock and that net worth, that should be taxed because he's utilizing it. If he wasn't, if it was just sitting there and nothing, he wasn't utilizing the money for collateral on anything. Okay. And so I guess there's a case to be made for that. I'm not a taxation expert, but it does seem like there's some legs to that. If you have $400 or $500 billion and you're utilizing that as collateral for financing and all of the stuff you would normally be using your liquid cash for, I don't know. It seems like there would be a reason to tax that to some degree.
I see the argument. Myself, ideologically, completely disagree with it, but because then it's like, well, here's my thing: if you have a capital loss on investment, you can only write off $3,000 per year. But if you have a gain, that government wants all of it. So alternatively, they tax you on all the unrealized gains. Well, if you're
saying,
then,
hold on, but you're saying 3,000. That's not the case. It's dollar for dollar gains against losses.
Right.
You can only carry over $3,000.
Right. But if you don't have gains in a specific, say you're at zero and you have 30,000 of losses, you can't realize 30,000 of losses. You can realize 3,000.
Right.
Alternatively, if you have 30,000 in gains, you have to pay taxes on 30,000. So, the government weighs the scales in their favor.
The fact of the matter is, you're talking about you and I, right? You're talking about our taxes. I don't think people like Elon Musk use our accountant.
Different animal, for sure.
Right? I mean,
if he certainly not.
I don't think he's using TurboTax. I have a feeling he has a whole establishment.
Can you imagine him on TurboTax? Taxable income.
What?
100 billion. I guess we'll have to start switching it to a T in a few years with him.
I mean, think about it this way. If it is approaching $500 billion, the fact of the matter is we're going to have our first trillionaire in 5 or 10 years.
It could be in 1 or 2 years.
Could be.
If the market has another 25% year.
Well, I mean, if Tesla goes up 100% and it gets to $800, he's going to be close to $1 trillion.
Yeah.
I don't know what else he's got in the
SpaceX. He's got 100 billion in the wings waiting in this court case that we talked about last time. We'll see if he ever gets paid for 2018 or not.
He doesn't need it.
I know he doesn't, but
he wants it.
No.
Yeah. All right. So we're talking a little bit about taxes, and I think it would be a good time to bring up for normal people, right? For normies like us. I think it'd be a good time to bring up. We're 2 weeks till the end of the year. And so some people are in kind of a mad rush to make sure that they contribute the most that they can to their 401k or to their Roth or traditional IRA. So just as a reminder for 2024, if you're under 50 years old, you can contribute up to $7,000 for 2024. It's going to be the same for 25. If you're over 50, there's a catch up. You contribute $8,000. So if you're setting yourself up for next year and you're under 50, I think it equates to like $577, $583 a month for 7,000 or $666 if you're 50 and above. Obviously consult your financial advisor, but if married filing jointly, if you're making up to around 240,000, you can contribute 8,000 if you're over. And it has to do with also your plan at your employer, right? So if you're contributing to your employer plan, you can't necessarily max out your Roth or traditional, but it is time, and you have until you do your taxes on traditionally April 15th. You have time to make those contributions if you're so inclined. Another thing that I bring up, if you're married filing jointly and both of you are contributing to an employer plan at the office or wherever you may work, I would significantly advise to think about contributing to the Roth portion of that. And I know there's going to be some some math wizards out there that say, you know what, if you really don't want to do that, you want to make sure that when you take the money out, when you're 70 and you're in a lower tax bracket, and I pause and I go, that sounds great. But from a behavior standpoint, I'd rather pay the extra tax now, not do the math, and have it all in a Roth when I'm 65 or 70. So I know people might come at me for that one, but just look at your options out there. And a lot of plans these days have a Roth portion to it, and I would seriously consider utilizing that. So all the CPAs out there, don't come for me. Yeah. Did you max out your 401k? Pretty close.
Pretty close.
Yeah.
I didn't quite max out. We're on one income right now, so
there you go.
Keeping some out of those retirement accounts.
So max for 401k, I believe 23,500, and it's going to be the same for 24 and 25. So that's a significant chunk of change that you can put into your employer sponsored plan. And obviously, people are putting lots of things, lots of places. But I just wanted to bring that up as we get to the end of the year. For anybody that is uninitiated, the basic difference between a Roth and traditional, whether it's your 401k, whether it is an IRA, is that in the end, with a traditional type of retirement account, you're going to pay tax on that. So you will get a 1099 at the end of the year when you take money out of that. With a Roth, you don't, no tax due, but you don't get the deduction currently. So the traditional IRA, you're going to get that deduction now, right here in that tax year where you make that contribution. And with a Roth, you're not. But then it grows tax, both do grow tax deferred. Traditional pay tax at the end, Roth you don't. And the other thing, no required minimum distributions on a Roth IRA, which I think is a real big win. They still both have, let me get in the weeds here. They still both have, if you pass away and you have money in there, they still both have a 10-year rule these days where the money has to be taken out within 10 years from your beneficiary unless it's your spouse.
Don't want to forget that.
But the Roth has no required minimum distribution, so it can sit in there significantly longer than the traditional. So if any CPAs want to come at me, it's the Market Enthusiast at goodlifefa.com, and we can go back and forth via email on that. So let's talk economy. We're winding down the end of the year. It's the middle of December. I mean, for the year, the economy has been really, really good.
Yeah, we've seen just the slightest tick up in inflation. We had CPI out this past week, 2.7% on the headline. That was in line. 3.3% on core, also in line, a tick up from most recent trend. We'll say we're slightly trending up on the 3-month. Core 44 months above 3%. That's a long time.
Yeah.
So we're not there yet, and that has people starting to grumble that maybe the Fed shouldn't cut so aggressively. You know, in September, before they cut the 50 basis points, it was the other way around. It was, oh, they dropped the ball. They should have cut in July. We didn't have a meeting in August. And then they went 50 in September. Now, 3 months later, now people are saying, well, why are they cutting? Inflation's ticking back up. It's never satisfied.
So when we entered the year, I don't have the exact data, but we were thinking 7 to 8, right? Cuts. And everybody was talking about a terminal rate, meaning the end rate of when they stop cutting would be somewhere starting with a 3, maybe 3 even, maybe 3 1/4. And it seems like those expectations for what rates are going to be when they stop cutting have risen, right? Instead of 3 at 3 1/4, maybe it's 3.75, maybe it's 4. And I think you have to take that into account for 2025 in terms of what the cost of borrowing is going to be, right? That raises it for businesses. It certainly raises it for us. So there was kind of an expectation built in going into 24, that rates were going to come down significantly, and rates were going to continue to come down in 2025, which would lead to higher margins, more people buying houses, all that good stuff. And so now I'm not saying the Fed is backpedaling, but they tell us that they are data dependent. And so when you start to see those inflation numbers creep up a little bit, you think, well, they probably are not. Now, they're probably not going to lower what we thought they were going to lower.
Right. We still think they're going to cut in December.
Yeah.
So we have that decision coming up. But yeah, we started out in, I think it was September. We were still expecting 4 cuts, equivalent of 100 basis points for 2025. And right now, consensus has us at only 50 basis points. So I think that would put us pausing in January, maybe going in March. And then who knows if we're looking at like a June or July after that.
Yeah, so maybe a little pause in
Right.
2025
Yeah.
until we see some of the data really start to come through that really supports lower rates.
Yeah.
If we stick around in that 3 number, so the Federal Reserve has come out and they've said that their target rate is 2 for inflation, with something close to full employment. Do they change their target at some point in the future to 3?
I think it would be difficult to unanchor those long-held expectations. I don't think they should unanchor them. So if they have to stop cutting to get it back down towards 2 and trending in the right direction, I would prefer that to them saying, all right, 2.5 is our new expectation for inflation. I don't think anyone wants an inch or a tenth of higher inflation to be acceptable.
Yeah. I mean, they tell us that they're data dependent, so they're looking at the information that as it comes across, and if it's not trending towards 2, it would be kind of crazy if they're like, oh well, screw it, let's just we'll target 3 now.
For end of 2025, there was 0.5% chance of a rate hike from where we're at right now. So take that as you will.
Well, in order to get a rate hike, there would have to be significant inflation coming back.
What would cause that, Noah?
Well, I'm glad you asked. There's obviously on the horizon, we have tariffs that are coming down the pipeline. We talked a little bit about that at the beginning with Trudeau, the possibility of him resigning or having an election where he is not elected, snap election. And then we know we've been talking about deportation. If the Trump administration comes in and wants to remove undocumented workers and they decide that they're going to take out 10 million plus workers, that is going to be problematic on inflation. And I don't this isn't a political statement.
I would love to see an unbiased economist do some supply demand functions on if we deport, say, 5 million people across whatever sprinkling of occupations they were doing while here, how that would counterweight with demand. What level of demand would also leave with 5 million people leaving. I'm sure ultimately it would still end up being inflationary, but I don't know if it would have a smaller or larger effect than consensus is just sort of expecting.
Well, I think we have 170 million people working, right? Total employment in the United States, approximately 170 million. If you're talking about taking 10 million people out of there, right, and you're talking about a 6.5% removal of the workforce, I mean, I don't see how you could not have significant wage inflation. And I think the thing that I hear people saying is, well, if that happens, you'll have inflation, but then it'll level out. But I'm not sure that leveling process is going to be, a month or 2 months or 6 months.
That's how tariffs work. Tariffs are essentially like a one-time step up, assuming the tariffs stay on a constant percentage. But yeah, wage, that's where you get the wage price spiral. Wages don't necessarily, I don't think they, in my economic brain, think they're a one-time increase.
Yeah.
I think they compound, unlike tariffs.
Yeah. I mean, I'm not up there advising the next president, obviously, but I think I said this before. I haven't come across anybody who isn't okay with removing undocumented violent criminals. Nobody has said to me, no, I don't want to do that. And I've talked about it with a lot of people. But I think there's a limit to how far that they can go. without causing some economic turmoil. And if you take that in conjunction with the tariffs that we know are coming, we just don't know how fast and how much and how many countries, but we know they're coming. I mean, it's pretty straightforward. If you take that in conjunction with it, it seems like there's volatility ahead in 2025.
We were talking about 2018 of what was the market drawdown, about 20% approximately. Now that was with China.
Trade War One.
Yeah, that was directly with China. So, I'm not sure the effects would be. It all depends on the magnitude. So we're talking hypotheticals here, but we expect it to actually happen this time. So I don't think the market would be as shocked. But additionally, it sounds like President Trump is willing to go farther, at least right now, as he's negotiating or positioning than he did last time.
Yeah.
So it's tough to gauge exactly what the market, because that's what it is. It's all behavioral. It's how will other people think and change their valuations and affect their decisions.
Sure.
It's hard to tell.
Going back to that drawdown in 2018, if I remember correctly, we had Larry Kudlow, who was a senior economic advisor to the president, had come out on a Friday afternoon and said that there was a trade deal with China. And markets rallied. I don't remember the time of day. The markets rallied. But then on Monday, the administration came out and said, we don't really have a deal. And I think
it was a handshake.
It was something like that. And I think that corresponded, I don't know if it was that Monday or Friday, but that corresponded with a G7 meeting in maybe Argentina or something like that. And then from that Monday, I think it was September 24th till December 24th, Christmas Eve, we had a 20% drawdown. And a lot of people attribute that drawdown to the trade war that was started, or the tariffs that were being put on there, or continued to be put on there. And I mean, it seems likely that will happen again. If your intention is to slow down global trade, I mean, that's what
protectionism does.
Yeah, that's what protectionism does. So I'm not saying that it won't pick back up after some period of tariffs being on there, but it seems like the first 6 to 9 months, as we were figuring things out, could be more volatile, significantly more volatile than 2024 has been. And so, I mean, that makes opportunities for traders, right? They don't necessarily care if the market's going up or the market's going down. It doesn't make a difference to them. But for most of the investors that we deal with, they're not trading in and out of stocks. They're long-term buyers and holders of the stock market. And I would just simply say that, 2025 is not going to be the same as 2024. Doesn't mean that we won't end up for the year. Personally, I think we have 10 to 15% for the year, but we might take some left turns in getting there.
Embrace the volatility. Use the VIX as an opportunity index, not a fear index.
So we have had a number of years where the market has gone higher. We have Bitcoin that hit a new all-time high over the last week or so, and I think
about a wild ride.
Yeah, I think people are getting a little less conservative in their spending. I don't know if you saw the Judy Garland shoes from The Wizard of Oz.
I vaguely heard.
Did you ever see The Wizard of Oz?
Yes.
Okay, just wanted to make sure, right? So a few years ago, like 2015, these shoes were stolen from a museum, right? Her little sparkly shoes that she wore literally during the filming of Wizard of Oz were stolen. Somehow they found their way back to the rightful owner or the authorities, and they were just auctioned about a week and a half ago. $28 million for those shoes. This is after we talked about it last time. We talked about the banana, the $6 billion duct tape banana. $6 million dollar banana. I just think, man, people are spending money on the banana thing's crazy. The shoes, $28 million for a pair of shoes that Judy Garland wore.
Yeah,
that seems a little frivolous to me.
I would agree.
Speaking of the past, Chi-Chi's is coming back. Did you ever go
When
to
did they? Yeah, I've been to a Chi-Chi's, but when did they go out of business? I didn't even notice when they disappeared.
They got
Were they select privately owned ones that stayed operating, and then just the chain closed?
There are no Chi-Chi's. The rights were purchased, and you can go into the grocery store, and they have Chi-Chi's salsa and cheese sauce and tortillas, but there are no more Chi-Chi's. But they are bringing them back, and I, for one, am really excited about it.
Right as those type chains are really struggling, so that's kind of surprising. Maybe they're trying to fill a hole, or maybe a nostalgic wish of people. I don't know.
What else do we have for us today?
We have some more reconstitutions in the indexes. So Workday and Apollo are being added to the S&P 500, and where they are replacing Corvo and Amentum. Corvo's a semi-stock, and Amentum is like an engineering tech solutions type stock.
Okay.
So that'll go in December 23rd. And we also have MicroStrategy. We're just talking about Bitcoin. Is basically Michael Saylor's leveraged Bitcoin bet.
Yep.
They're being added on December 23rd as well to the NASDAQ. So Bitcoin's really been moving. And I mean, while we're here, I read a white paper, not Satoshi Nakamoto's, but I read a white paper on the index effect. So I'm sure a lot of people out there have heard, oh, if something's going to be included into an index, buy it because it's going to run up in price in advance of inclusion and people being forced to buy it. But this white paper from Harvard was talking how that's been disappearing. So if you go all the way back to the 90s, not that long ago, but back to the 90s, the average inclusion effect, positive effect for someone going in was 7.4%. So it makes sense. You would want to buy in, ride that up until inclusion.
Sure.
But if you go to the last decade, and now this is just the last decade, not 2010 to 2020, just go the last 10 years, it's statistically insignificant. It's down to 0.3%. So
did they say why that is? What was the data behind it?
They did. So it was sort of predictability. So obviously it was worth finding out back in the 90s. So people have put in a lot of effort. Analysts look into who's likely to be included. And a part of being an index is you sort of have to know the inclusion requirements so you can make a fairly educated guess at who is going to be included. Another piece is index migration. So Amentum and Corvo are actually going from the S&P 500 large cap into the S&P 500 small cap, S&P 600. So it's an index migration, so they're not losing as much as you would think. They're still forced buyers in there, essentially. And then the last piece is just increased liquidity. So if you go back to the 80s, index investing wasn't really a thing, or not on the scale that it's on now.
Sure.
So right now, index investing, made famous by Jack Bogle and Vanguard and, the BlackRocks of the world, is very, very popular. I mean, there's some estimates that flows are upwards of 70-80% passive investing. So that's going all into indexes. And so you're getting increased liquidity. That's sort of taking away the advantage or flows.
But wouldn't that mean, contrary to what you're kind of putting out there, with all the flows going into indexes and the amount of money invested in the S&P 500 in the aggregate, wouldn't that mean that there'd be more forced buying to drive the price up?
So what they said in the paper was there used to be active institutional buyers over leveraging into the positions prior to. So maybe you have a specific manager who has a $1 billion fund. They're going to put 50 million or 100 million into this because there's a 7% positive effect you're going to see there. But just because the active managers have less money, basically, and it's all going to passive, there's less active bets being made like that as before. So it's all just, you're going to get your 0.5% for being a part of the S&P.
Could we sum all of that up to markets are efficient?
They're getting there, yes.
Right.
They're getting more efficient on this specific metric for sure.
Yeah, no question about it. You mentioned, being added to an index, and I think it's worth mentioning. NVIDIA was added to the Dow Jones, right? on
He's going there.
on December 8th in the morning. It was added to the Dow Jones. And what do you think happened since it was added?
Where are they down? I think it's like 12 or 14% or so. I don't have the
NVIDIA's
exact
down
number.
12.5%, and since they were added to the Dow Jones Industrial Average. Now, the stock that they replaced, Intel, is down 22%, right? Because there's a bunch of forced selling from those passive indices. But I was not expecting to see
the
NVIDIA
Dow curse was even able to take out NVIDIA, at least for now.
Yeah.
Well, I'll have to get back to you on deletion effects because they had the stats in that white paper as well.
Well, a few years ago, Salesforce was added to the Dow, and then basically it went straight down and didn't do anything for a year and a half, 2 years. Finally, it's been coming back up. But it is interesting to see that there really is, you're not getting that bump that you used to get when it was added. And in fact, over the years, is for the Dow, not necessarily the S&P 500, there's kind of a curse.
Yeah.
I suspect NVIDIA won't be the company, or will be the company, to break that curse. I don't think it's going to fall into that trap. But certainly in the last 2 weeks, it has.
Yeah. Broadcom had an amazing report in there. I think they're up 30+% in the last 2 or 3 trading days. And maybe some of the flows coming from NVIDIA is like, oh, there's a little competition here in AI now.
Yeah, there's no question about it.
And they're in the Dow, so.
Well, listen, we know we're halfway through December, which means the end of the year is coming up, and we have Christmas coming up. We know that there's lots of traveling happening everywhere. And I read this stat that for 2025, that airline passengers are going to be over 5 billion worldwide. 5 billion people worldwide traveling, with revenue of over $1 trillion, not for the US, but global revenue over $1 trillion. So are you traveling over Christmas?
Not for Christmas, but we'll be traveling after Christmas. Be going to Orlando. See if I can get a day at the parks, maybe.
There you go.
See my sister-in-law down there.
Nice.
We'll be traveling then. And looks like I might have a May trip coming up as well. So
okay, good deal.
We'll travel a little bit.
Good deal.
How about you? Where are you going?
We're not really doing anything for Christmas. I was trying to. My cousin is having her 50th birthday, and she lives out in the North Fork in Long Island, and trying to get up there. But my wife and I are going to see Fish at Madison Square Garden on the 28th. They have a 4-night run. Tickets are still available for anybody who wants to go. So we're going up on the 28th, and we're taking a train, and it seems like it would be very hard to get out there. I can't do it Friday. Tuesday is the last trading day of the year. I can't really be off on that. So I feel like she's going to be very upset with me for not seeing her on her 50th. I might have to make it up to her another weekend. But no plane travel for Christmas. Train travel. Amtrak, baby. Okay, and I don't think anyone ever says that. Yeah.
One last thing here on my end. We had Albertsons and Kroger, a massive grocery deal that got blocked by the FTC on antitrust, monopoly things. They are the number 1, number 2 grocers, so it kind of makes sense. But they are not the largest sellers of groceries. That, of course, is Walmart, who has about 21% of grocery sales in the country, and then they also own Sam's Club, which is another 4.3%.
Yeah.
So they did. Kroger and Albertsons did get blocked, but I think this sort of strengthens Walmart. I think it puts them in a stronger competitive position because it's a very low margin business, grocery sales, and quantity, discounts of scale definitely apply there. So sure. Walmart's happy with how that panned out.
I mean, they've over the years, they've gotten into a lot of markets. When they got into the drug market, you saw all of the pharmacies, the CVS's of the world, the Rite Aids. I mean, Rite Aid's been in the tank for years, but you've seen those pharmacies really come back a little bit when Walgreens, right? Yeah. I mean, they are a mom and pop destroyer.
Yeah. Same with Amazon. What were they called? The Death Star for a while when they were really hot a few years ago. Same deal there.
I can't stop using Amazon though.
Yeah, me neither.
Walmart,
It's too convenient.
I'm not a Walmart guy, but I'm definitely an Amazon guy, especially over the holidays. It's like every day I come home and I pull into the driveway and there's like, I hopefully don't have to worry about porch pirates, but there's always stuff on my porch. I should really, I don't have a spot to put it. What do you do? Like,
put a little bin out there. Well, if you were like in the city, you could put like a bin out there and have them lock it.
Well, so far I've been lucky enough to not have porch pirates that I'm aware of. Although we just did order a phone and it came in today and the box was open and the phone was missing here at the office. Yeah, kind of crazy. All right. Well, everybody out there, thank you so much for joining us. We have Christmas coming up. We hope you have a wonderful Christmas and happy holidays. And we will see you after Christmas. For Good Life, I'm Noah Brooks, and with me, Chris Needs. Thank you so much for your time today.
Happy holidays.
The opinions voiced in this podcast are for general information only and are not intended to provide specific advice or recommendations for any individual. To determine which strategies or investments may be suitable for you, consult the appropriate qualified professional prior to making a decision. Economic forecasts set forth may not develop as predicted, and there can be no guarantee that strategies promoted will be successful. All performance referenced is historical and is no guarantee of future results. All indices are unmanaged and may not be invested into directly.